Welcome, Color Report Live, March 26th edition. Hey, we have John Riosti, a stealth caller. John, he's a community bank reporter with the American Banker. John's a great guy. He used to be with the American Banker, joined the Army, did a tour in Iraq, went back to American Banker. Then they sent you to Washington State. I didn't know that.
Yeah, they did. They did. To work with the Veterans Administration for a year.
Very good. Hey, John, I thank you for coming on, but I don't know if we have anything to talk about today.
No, not much. No, there's everything.
Hey, let's go to the appropriations slide.
Yeah.
I mean, these numbers are staggering. You're talking about an agency with a budget of what? About $800 billion.
$750 million.
And they're talking about $675 billion for salaries and expenses to increase staff, $349 billion to increase lending, 25. Now, this one's interesting, and I'm not going to harp on it, but just be careful. $25 billion additional for the OIG and other programs. John, tell us what you know.
Well, the two interesting things I'm following, because there's probably a million interesting things in that bill, but the two ones I'm following most closely are what will fintech, what will they be allowed to do in this? And I really was looking at Express, which I think you've covered previously, but I was sort of disappointed to see that the Express level resets after the end of this year. It jumps up to $1 million once this bill is passed, and then it will reset at $350,000 next year, barring some other intervention. But the fintech angle is very interesting. The bill gives the administrator and the Secretary of Treasury the authority to approve any other lender that they feel is capable to originate, fund, service, loans. So any lender that they feel is capable, which would theoretically include fintech lenders, and they definitely want in. Some of them were knocking at the door of SBA, wanting to join 7A before the crisis. The agency seemed reluctant to allow that. They've been moving in the opposite direction, or they were moving in the opposite direction, but now they have to make a decision about this giant emergency program.
How big of a problem do you think that is?
I think it could be a very interesting, thorny issue for SBA, because their inclination was to sort of pull the reins in, pre-crisis. They have a proposed rule that would limit involvement by non-federally regulated lenders, and that would include all fintechs, to the state where their primary regulator, their primary state regulator would be licensed, is headquartered. So, for instance, Funding Circle, they wanted to apply to join 7A with California as their state regulator. Under this rule, if it is enacted by SBA, they would only be able to make SBA loans, 7A loans, in California. Well, they're a nationwide lender. So that's, you might see that as a disincentive for them to participate in SBA.
Right.
So, the agency has to sort of make a really tough decision, because there are real questions a lot of people are raising. Can the tried and true networks of the agency's trusted partners, the banks, the credit unions, some of the bigger non-bank lenders that have been there for a long time, is that big enough? Does that have enough capacity to very quickly lend $350 billion?
Well, my next question to you is, what are the traps in this program, and do you think they can pull it off?
It remains to be seen.
I withdraw the question, Counselor. I'm not going to.
No. I do want to say this. I was talking to an academic, and he'll be quoted in my story. His name is Rebel Cole, and he has thought about this quite a bit over, the past few days as the legislation has moved closer to passage. His initial thought was no, they didn't. But his thought is now, possibly they could pull it off, and I'm talking about the traditional networks could pull it off with a little bit of innovative work. And I won't give out too much of the stories because I want people to read it. But he said with some innovative thinking, maybe the existing network could do it. That there is enough capacity when you consider the size and the capabilities of some of the lenders.
John, go back and give us sort of a 101 on this, because I know there's people who are confused, and I'm confused. We keep 7A as is, correct?
Yes. That's my understanding. They keep 7A as is. The one, I guess, exception to that is SBA Express,
Right.
which we just, I just, referenced the.
John, what are they going to call the new loan program? Do you know?
What I've heard, what I've seen several times is Payroll Protection Program, PPP. So I don't know that that's the official name, but I've, in several emails to me, people in Congress and others have used that acronym. So it's as good as any, I guess.
John, what's interesting, this bill is 880 pages. I read somewhere this is the largest bill ever passed by Congress. Is that true? Was that larger than Obamacare bill?
I don't know that. I'm doubtful about that. I think some of the bills I remember seemed a lot longer than that.
Yeah, I didn't have a chance to fact check that. Look, this is what we're doing from an editorial perspective. We're going to have John come in today, talk a little bit more overview, and we're going to do that. And next week we'll get more and more specific. We're going to have a very specific webinar on this. I mean, this is huge in terms of the changes on that. And we're going to talk more about when you do Express 7A PPP. So we'll do that. Let's go to the poll questions.
I have a strong opinion on this one, Bob. The answer to the question is, do they currently, or will they have, once they implement some of the monies?
Yeah. Will they, the intent of the question is, are they going to be able to gather the resources to pull this off? Yeah, that's the intent.
Yeah, and one thing that I've heard, there are some lenders that have gotten misplaced as a result of this economic climate that we're in, and have called me, and I've encouraged them, go on usajobs.gov, get your profile built, because guess who one of the most active employers will be going forward? It will be SBA. Back in the last recession, a lot of those positions were term positions, two-year positions, one-year positions, but anybody out there that knows somebody in the finance industry that may be looking for a job, my anticipation is SBA is going to have an incredible number.
And I know I've been reached out to by a number of BDOs who have already lost their jobs. One large lender laid off a number of BDOs. And if you're a business development officer and you have expertise with this, go ahead and if you can't find a job somewhere else, go ahead and apply.
And the other thing, it can become a career, Bob. When I left SBA, my deputy director position, the current deputy director that took the position after I did started out as a term employee.
Yeah. Do you agree with SB Express increasing to $1 million? I think I know the answer to this one.
Well, it needs to be permanent.
Well, the intent, from what I understand, and John, you can correct me, the intent was that it's very good. The intent was in the budget for 2021, it's in that budget to go to $1 million. So that's why I'm not as concerned as you are with the $500,000 as of January 1, because it's going to be in the budget to keep it permanent. So I go ahead, Lance.
I'll jump.
John.
I'll jump in real quick. It was in the budget for this year too. Bob. It's been in the budget. They wanted this for a while. They just haven't been able to get it for whatever reason.
Well, they didn't have the funding for it, but now they're going to have the funding for it. So, but I think I agree with you. It's a concern, but I think they'll get it done. Number 3, do you agree with SBA 7A increasing to 10 million? I think this is a more interesting question.
Yeah, this is a huge question. The question is, Bob, would it stay permanent? And what is that going to do to credit elsewhere as we start looking at $10 million projects?
I cannot answer if we know that the PPP is going to go to 10 million. I cannot give you an answer if regular 7A is going to go to $10 million. John, do you have an insight on that?
My thinking is that it's not, because just I think, as Lance sort of indicated, as you get to $10 million loans, you're talking about entities that may well, go beyond what is considered a small business.
Yeah, we've spent the last couple years talking about credit elsewhere, personal resource tests, and when we start looking at $7, $8, $9, $10 million projects, it's hard for me to believe it would be part of 7A.
Well, also remember the definition of a small business is companies with less than 500 employees, and that's a pretty large company.
Well, that's a manufacturing definition. If we go to retail and service, there's some other, but the long and short of it is that would be some very sizable financing. Now, as somebody who lends, I want it to be 10 million, Bob. Large projects.
And here we have John's question. Only the non-bank fintech lenders can answer this. Are you seeking approval?
Hey, Bob, you want to know why they put 25 million in for the inspector general?
Oh, I know why. I'll let you answer that, though. There you go, John. Does that help?
That helps, yeah.
Well, I think with this incredible amount of SBA lending that supposedly is going to take place, there are also going to be people who take advantage of the program, people who don't do it properly, and the inspector general is going to need additional resources to police the implementation of,
and they will,
and the lack of a.
Actually, let's but be reasonable, Inspector General. Be reasonable. Don't nitpick. I put this caution sign up because this is the first of 3 legs: Senate, House, and Katie, I want to let you jump in here, and then SB promulgates the rules. Katie, tell us what you know about the House.
Well, Pelosi came on this morning and was saying that she thinks the House will vote tomorrow morning, and she expects it to pass. She's reiterated that about 4 times, that she says it will pass. And it sounds like they plan on having a separate bill for some of the other things that the House wanted to include, so that this can pass and they can work on the separate bill at the same time.
Very good. Thank you. These are, and we have already discussed this, but I wanted to make sure everyone understands there's 3 separate programs. John has corrected me. I thought it was going to be called CARES, but it's going to be called the PPP. And we'll be talking about this a lot more on, are there any changes 7A? That's 60 pages. It hit this morning. I haven't had a chance to go through it, read it, and map it all out. Express will be there. And of course, the new program. And there's a lot of uncertainty on that. But we're sort of slow walking this, and we can give you what we have. And I think the final interpretation by SBA, because Congress and the president are saying, get this done, Lance, I don't see them making too many changes, because a lot of this stuff is at the discretion of the administrator.
Yeah, I agree that it'll be implemented very similar to some of the things we're seeing. But the hardest part, Bob, is taking the phone call from the small business owner. In this world of social media and instant news, every small business owner is reading about what supposedly is going to happen. And I have to say, hey, guys, yeah, The disaster part is funded. You can go online and apply for that now. Here's the URL. The part that the bank is going to implement has not fully been approved yet. We don't have any guidelines for how to implement it. So call me back in a week or two and maybe I'll be able to answer that question. But small business owners look and they see, and, Bob, two questions come up most frequently with borrowers. One is they're wanting to know about this debt forgiveness and how that's going to work. Well, we don't know all the details right now, but that's a very common question. The other job is an existing business that's not really struggling, but wondering if they can somehow get some of this money to expand and employ more people.
And Lance, where are you sitting right now, and why are you sitting there?
Oh, I am in the Radio Shack store in Clarksville, Arkansas. There's exceptional internet, and yes, guys, there are still Radio Shacks. My dad has an independently owned store, and he's got exceptional internet and a great space for me to work. So I'm taking care of my bank activities and doing Coleman Report Live from Radio Shack in Clarksville.
I love it, and I love your monitor over your shoulder.
Oh yeah, guys, if you would like to, I haven't talked to my dad yet, but it's a compact with some side mount speakers. I know he'd be willing to sell it if you want to submit a bid.
Joseph, let's move to the next slide, get John back into the conversation. These are the big things, John, that I picked up. You want to address each of these?
Well, you have to read them to me, Bob.
I'm sorry. Affiliations, they're saying they're going to scratch out the affiliation rules.
Yeah.
And then,
but for the PPP program.
And collateral requirements.
So not for regular 7A.
Okay. And what's the collateral requirements for PPP?
None.
And we're going to go non-recourse, which I think Joseph, make a note. Let's ask that poll question tomorrow. Non-recourse, which means no personal guarantee. How do you feel about that, John?
Right. I think I agree with it. They are trying to, because collateral, personal guarantees, other things, it adds to the time and the paperwork and the difficulty in the application process. And what I've been reading and hearing and from a lot of sources is pertaining to the disaster loan, the EIDC EIDL loans, is that the process is very complicated and time consuming and difficult. And I don't know if that has guided their actions here, but it seems very clear that they want this process to be, as easy and smooth as possible. They don't want to, they don't want to, exactly. Not a lot of signatures, not a lot of documents, speed.
And John, I don't know if you saw the notice. SBA, by the way, they're on steroids right now. We're getting 2 notices a day from them. And they say they will accept e-signatures, so you don't have to go face-to-face with your closing staff in the bank conference room and put 6 people together in a petri dish.
Yeah.
Credit elsewhere is real quick, probably is not doesn't have the same test. Tell me about the 100% guarantee, John. What's the theory behind a 100% guarantee?
Well, the 100% guarantee, I think, is to get the bankers involved in this. Everything is theoretical. They talk about 1,700 bank partners, and obviously credit unions are included. There's 1,700 lending partners. X number of branches that you can go into there. But if the banks aren't as eager to participate, then that all gets reduced and sort of narrowed down. And you have to remember, these are very, very, in a lot of cases, businesses that are just hanging on, that aren't necessarily good credit risks. I hate to say that, but I think it's the truth. And I was listening to one banker who was talking on a investor conference call, and that's what he said about just sort of disaster lending in general, and in this case, it's economic impact disaster lending, is that it's still disaster lending. It's difficult to do, and it's not what I think most lenders would choose to be part of.
Well, Bob,
but we're living through an extraordinary time.
Well, Bob, one of the things about the 100% guarantee is, as a banker who's been involved in SBA lending for a long time, you're saying no collateral, no personal guarantees. If I don't have 100% guarantee from SBA, those, they're going to loosen underwriting standards for these loans, and the 100% guarantee is necessary to get participant banks to be involved in this program.
And that's the plan for pushing the money out quickly. We can all tell stories of all small businesses we patronize. Restaurants, my cleaners just cut their hours in half because people aren't getting their clothes clean. It's interesting, and I'm going to marinate on this a little bit more, but this is an entirely different animal than 7A and whatever. So we're going to obviously follow this story very closely, and there's other stuff that we have to do, but we don't have time today, obviously. Hey, let's bring Katie in. Katie, this rule, go back 2 slides, Joseph, please. This rule dropped this morning. Tell us what it means.
Right. So this rule, we just got it this morning, so I haven't had a chance to really go through it in too much detail. But basically what it is saying is for a loan to be included in the April 15th debenture sale, a CDC that has already submitted a debenture closing package must certify that there has been no unremedied adverse change in the borrower's ability to repay their 504 loan.
So yes, so if you're in that situation, be sure and get it in very quickly. That notice is attached to the GoToWebinar dashboard, by the way. We also have the entire 880-page bill in the dashboard if you want to cure your insomnia. Yeah, page 7 or 8 should do it for you. But if you want a pro tip, the pages for what we're talking about are 8 through about 63 on that. I know we have a bunch of questions. What our plan is in the webinars and next week, as we have more and more ideas of how this program is going to work, we will go ahead and answer your questions. Lance, we got 150 questions in the queue, and we will go through and get them all to you. Obviously, it's going to take a while to sort through that. We do that, but we're going to do a program on more specifics on a webinar next week. Lance is going to talk about deferments. And Lance, is there an issue with deferments on 7A, or is that just PPP, John? Do you know?
As far as I know, there's no deferment for 7A.
Okay, so Lance will go through, but there are deferments, but not in the bill.
But there's not any special deferments, but I still want to remind participant lenders that in your SOP 5057-2, and of course the new one that comes out, you can make a payment deferment for an SBA loan customer. Again, if it's sold on the secondary market, you can do 90 days unilaterally without investor approval. If you want to do more than that, it requires investor approval. And if it's a loan that you haven't sold on the secondary market, you can defer up to 6 months worth of payments unilaterally.
See, my confusion is there was a clause in the bills that said if the investor did not approve the deferment, the administrator has the right to step in and do something. So,
on the secondary market stuff, there is some language that talks about deferments on loans sold in the secondary market, but your standard servicing deferments that you can do, they're still there.
We are being aggressive and think that SBA will have the specific rules out by April 15th. If they don't, obviously we will push that webinar, but Lance, that's our plan. We're going to do I think it's our 12th annual motel and hotel financing webinar on April 22nd. If you're interested in sponsoring this, send an email to Joseph, and we have a 2020 media kit. We would love to have someone sponsor this free show for you, because we're not going to charge you for it. And those are the questions. And Katie, thank you. John, thank you very much for your time. We appreciate it. Lance, as always. See you tomorrow.
See you guys tomorrow. Have a great day.